Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London sugar markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that.
Ice raw sugar in New York. The move up here in February started something I mentioned 3 weeks ago, a February to early March based double bottom pattern, with the market reaching both the primary and secondary targets for this pattern 2 weeks ago. Now, the green short medium moving average currently at 1457 and the mauve medium moving average currently 1467, plus the influential March 21 low at 1466, managed to hold prices down for a while. But a week and a half ago, the market broke higher. And by the end of that week, the market pushed up over the gold long moving average, which is currently at 1532, and started utilizing it as a base for a move higher. The patterns to now look out for are the ones I've mentioned here before. Firstly, it was, still is I suppose, the breached bright green upper time, currently at 1580 of the bright green late September 24 to late February 25 bearish shift pitchfork. This had been coincident with the February 2020 high at 1591, but the breached bright red green upper time is now lower, and though prices have also breached this high from February 2020, we so far have not had any sustained consecutive closes over either, despite the breaches. Secondly, and possibly the more important one, though you wouldn't have guessed so from its behavior in October and November last year, is the bright red upper time. And that's currently at 1623 of the longer term bright red November 23 to September 24 bearish shift pitchfork. And that's currently, it is similar but a slightly shallower bearish shift pitchfork. This is awfully close, the upper time there, to the June 2021 low at 1619, various congestions at 1634, plus a little high up, the May 2017 high at 1659, with various highs from summer and autumn last year. And that's all the way up to the April 2017 high at 1716, so it's quite a lot on the top side. Thirdly, and this I also warned about 3 weeks ago, is that we are set up right now with just today and tomorrow left of March to go. We are set up to make a monthly key reversal here for March. Thus, if we close on Tuesday, the 31st of March, either over 1430 or under 1427, so actually a really quite narrow range, well, we would be on. Anything in between that narrow range and would have a lesser outside month pattern. Right now we are set up for a monthly key reversal up. Thus we have some significant bullish pressures being exerted on this market, but we are now coming into a significant area of congestion before a piece of free air overhead after the April 2017 high till the 50% absolute Fibonacci line of the 21st century at 1809. With all these forces in operation, it's no surprise to see at least expect two things. Firstly, significant intraday indecisiveness, which we have seen last week with a fifth countering, yes, that's right, a fifth countering pattern last Friday. Secondly, and this is something to look out for, something has got to give way in this market. So caution, it may be explosive. Ice Europe white sugar in London. Okay, so we are continuing to winnow away some important features in this market with the move up that started back in mid-February. Between 4 and 2 weeks ago, the market utilized the green short medium moving average, currently at 418.10, as a base, with additionally, once it was overcome, with additionally the mauve medium moving average aiding, and that's currently at 420.90, and that's aiding the move higher. And that's slicing through the bright pink middle time, currently at 429.90 of what I asked you to keep an eye on 48 weeks ago. So coming up to a full year. And I quote, to also keep an eye on the bright pink late September 24 to mid-March 25 recently finessed bearish shift pitchfork. This is a very shallow pitchfork, and the more the market moves through it, the more I'm beginning to like it. End of quote. Well, since then, the market initially started utilizing the bright pink middle tine of this bearish shift pitchfork as an attractor, riding prices lower in a shallow glide until finally mid-February prices pierced the bright pink lower tine, which is currently 371.60. This fall 9 weeks ago did not cause a great bearish pattern, but instead prompted the construction of a pipe bottom late 7 weeks ago, and then into a V bottom, eventually a V bottom with a shelf. The resultant move higher closed over the pink middle tine a week and a half ago, gapping higher the next day and closing over the now flatlining gold long moving average, which is currently at 443.30. Since then we have moved higher, but not to the degree of what we saw earlier 2 weeks ago. The reason for this, and perhaps why prices may also be possibly considering going sideways or even turning down, and I do note the potential for a daily key reversal here today, and possibly even just today and tomorrow making a weekly key reversal down. I do note that. But even turning down is what I said last week when I said, and I quote, the cap on the market was the February 2020 high at 456.70. A little above it, and possibly influencing the capping action, the bright red January 24 to date downtrend, currently 459.40. These have, as I said, capped the market late last week and this week, and that's the end of that quote. These resistances are still in operation now, eroding the bearish incentive, and also add higher up and untested as yet the May 2017 high at 469, though we came close to doing so today. Additionally, the February 2020 high is also the gateway to the rectangle congestion pattern overhead formed between approximately June to September last year and between about 456.70 to about 495. This seems a more determined resistance above, and I would give in evidence one simple feature. Unlike New York Sugar, there is no monthly key reversal here for March. Indeed, prices could rise all the way to the pink upper tine above, currently at 488.30, and still be with a bearish pattern. Hence, I think this last piece is a key factor to consider, along with what's potentially going to be a daily key reversal down, and if it carries on, already a weekly key reversal down in potential, possibly. Sugar white premium spread. One new feature that has to be fair erupted on this market now overshadows all earlier bearish patterns. I said as much 5 weeks ago when I said, and I quote, the gapping action higher seen specifically over the bright red neckline, currently 97 3/4, the verge of retiring these targets below, if only that prices have closed last week on the mauve medium moving average, currently 98 1/4, and the high has not exceeded the gold long moving average, currently 106 3/4. That has stayed my hand in taking them down this week. What the market does with these two moving averages in the next few weeks will, I believe, determine the future. End of quote. I went on further when I said 24 weeks ago, and I quote, only concerted, consistent and long-term moves over the bright red neckline, and ideally over the slowly rising long moving average, could possibly assuage the bearish potential, at least as far down as the 70 even to 85 even congestion. End of quote. We had closed over the bright red neckline weeks ago, and last week we closed over the very slowly declining gold long moving average, currently 106.5, for the first time since we formed that head and shoulders pattern made between February and September 2025. The first time since September 2025. Hence, we are in the process of assuaging the bearish potential. Indeed, the action is prompted by something that just a weekly chart fails to show. The single new feature that's shown up in last 5 weeks has tipped the balance for me, and was, as I've repeatedly said, has been the monthly key reversal here up, seen here in February. 4 weeks ago we went further with a combined weekly bullish engulfing pattern and bullish opening white Mariposa, plus, above all else, a weekly key reversal up 3 weeks ago. Prices went on to stabilize over the mauve medium moving average, currently 99 even, and last week over the gold long moving average, with this week possibly looking to stabilize over this last one. It's early, it's only the first day of this week, but we'll see. I added last week, and I quote, I suspect consecutive closes over this gold long moving average will be key to the future health of this market. If those do not happen, then the bright red neckline below is seemingly ready to be tested again. End of quote. Well, what do we have above that could stymie further gains? And the answer is not much. We'd have to look higher to the July 25 to date downtrend, which is currently 122 3/4, to see the first significant resistance, and then the pair of 50% Fibonacci lines higher up of the July 19 to September 20 move and the August 21 to September 22 move. They're both actually September 22 move, and that's at 128 3/4 and 131 3/4 respectively. None of these three resistances look that great right now, but not being tested either.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.